In today's video, we'll be talking about Bitcoin, of course, from the beautiful coast here in El Salvador. We'll be talking about the question of, are you too late to Bitcoin? Spoiler alert, no. If you clicked on that video and know any of my videos, you know the answer already is no. But we're going to go through the math of why the answer is no, right? Because it's not just enough to talk about, principles, right? People want charts. So today we're going to be looking at charts. Here is a chart explaining why you are not too late to Bitcoin. A lot of people think, oh, I'm too late to Bitcoin. Even if I bought $50 of Bitcoin, it's not going to make a significant impact on my life. Well, my friend, that would be wrong. If you began buying all the way back here, years ago, if you started buying in January of 2021, a weekly $50 dollar cost average. DCA means dollar cost average. It means every single week you buy $50 of Bitcoin, right? Just smash buy $50 of Bitcoin Monday morning. Next week, smash buy $50 of Bitcoin the next Monday morning. No trading, no cute stuff, no market edge, just buying and holding $50 a week every week. What does that turn into? If you started buying in 2021, when Bitcoin was near a local high for multiple years, right? That would result in $31,000 of Bitcoin. Now, if you kept that in cash, you would have about $10,600. If you had it in the NASDAQ, you'd have about $15,200. In Bitcoin, you have over $31,000. Now, if you can see, for the first couple years down here, by the way, this chart is by Wicked, known as Wicked Smart Bitcoin on Twitter. Highly recommend his charts. He has great charts and, great coder, does awesome stuff online. But if you would look here, first couple years doesn't look so hot. If you'd invested in Bitcoin, which is the orange line, or in the NASDAQ, which is blue, you'd be underperforming cash for a period of time, right? Yes, you'd be under a little bit down here, but if you zoom out, you see that, pretty soon, both the NASDAQ and the Bitcoin outperforms it. Now, it's interesting here how there wasn't a lot of volatility in the Bitcoin price compared to the green line, which is cash. Why is that? It's because at the very beginning, every single weekly DCA is a very large percentage of your stack, right? The first week, $50 is 100% of your stack. The second week, it's 50% of your stack. The third week is 33% of your stack. Then it gets a smaller and smaller percentage forever. So at first, that $50 has a larger impact on your stack's purchasing power than the increase or decrease of the price of Bitcoin. But now, if you've been saving in Bitcoin over the last 4 years, since 2021, $50 a week, now you're looking at that orange line where all of a sudden your weekly DCA stack already doesn't matter that much anymore because the volatility of Bitcoin's price is in your favor. Now, let's say instead of 2021, you bought at a better time, right? Or what is quote unquote a better time, right? Because this is something people say, oh man, I started buying at the Bitcoin high. I was buying at the wrong time, right? But again, time in the market is better than timing the market. It's true for stocks and is especially true for Bitcoin. You don't want to try to time Bitcoin. You just want more time in Bitcoin. Even if you started buying Bitcoin later, when Bitcoin price was cheaper in 2022, guess what? You would have less money in Bitcoin than if you had started in 2021 when your average cost basis was higher. With this example, likewise, it looks like a similar chart compared to the first one. However, because it's on a shorter time frame, you end up with barely over $20,000, right? 20 or halfway through $20,000, $25,000 instead of over $31,000. That 1 year cost you $6,000 of opportunity cost just by delaying 1 year and not investing in Bitcoin. Now, let's say that you're someone that's even more bullish on Bitcoin, someone that has more capital. If you were doing $500 a week, just multiply this math by 10. $2,000 a month is difficult for many, but it's not completely absurd. Imagine if you had started buying $500 of Bitcoin every week, $2,000 a month, right? $24,000 a year for the last few years. You'd have to multiply this number by 10. You'd have $250,000 in Bitcoin. You're buying $500 a week. Now, here's what happens if from 2023 you had the scenario. Again, this is quote unquote by common logic, the better time to buy Bitcoin. Oh, I started buying Bitcoin at the bottom in 2023. Oh, I started buying at $18,000. I'm so smart. I didn't buy it at the $69,000 top. I'm a genius. Bull, right? You could say that, and maybe that makes you feel good. You can pat yourself on the back, right? but you're not trying to actually save the most money and purchasing power for your kids, grandkids. You're just trying to make yourself feel good with little dopamine hits, right? For actually having the goal of saving purchasing power for your kids, you want to start as soon as possible and not care about the price. Even if you started with the same dollar cost average in 2023, you would only have $14,000 if you started in 2023. And let's say you started in 2024, you missed the bottom. You missed the bottom in late 2020, to early 2023. So let's say you started in 2024. Oh my goodness, the ETFs are approved. Let's start now. If you started last year, just over a year now, we're here recording in early 2025. If you started then, you would have about $4,500. And so the lesson here is that time in Bitcoin beats timing in Bitcoin, right? If you look at this chart, this, the time frame is so small, you can actually see every $50 increment in the green USD chart, right? And likewise, in the Bitcoin chart, you're basically tracking dollars for the majority of the year. It hasn't been until recent where Bitcoin has actually begun starting chipping away. So again, have a time horizon of years, because the longer you zoom out, better you're going to do. Now, of course, this doesn't factor in lump sum, which many people do lump sum. And I would say the math also implies if you're going to lump sum, you should lump sum sooner than later, because Bitcoin tends to go up. And it's better to lump sum sooner than later. Now, a lot of people, some of whom are clients of mine, what I see them do is they get a loan, and instead of using DCA in a typical fashion, they use that DCA cost for the loan. Let's take the example of $2,000 a month again. Instead of dollar cost averaging $2,000 a month into Bitcoin, what I see some people do is they take out a loan, let's say $500,000 or so, they smash by the Bitcoin. And as long as that debt coverage of that loan is $2,000, they have transformed a dollar cost average into a lump sum. And that statistically, historically, is very likely to outperform the DCA. $500,000 today is more likely to outperform than $2,000 every single week for the next 250 weeks, roughly 5 years, right? More with interest, obviously, right? Not everyone should do that. But if you're looking to borrow money to buy Bitcoin, that's the way to think about it. Use the cost it takes to fund the loan, subtract that from your monthly dollar cost average. And so the question is, how high could Bitcoin go? Okay, sure, look, you've been looking at these charts the last few years, but if I started buying $50 now, surely now it won't matter anymore, right? You were just saying a moment ago that $50 every single week in 2024 is nothing like it was in 2021, right? Well, actually, that's not true. In the future, I believe Bitcoin has a very, very high upside. How high? Well, I believe as long as Bitcoin remains decentralized and secure, it remains inevitable to absorb the purchasing power of the other assets in the world, all the monetary premium of the other assets in the world. How high is that? Well, Hal Finney in 2009, back in the first week of Bitcoin's existence, predicted if Bitcoin were to do that, it would reach $10 million per Bitcoin. And now that is $26 million because of inflation, right? Obviously, since 2009, prices have gone up. Prices have gone up since 2009. And so, if you're adjusting for inflation, that's $26 million. That's a very big number, right? You can do a lot with $26 million. You can buy this property I'm on. I guess I should show you. But beautiful ocean view, beautiful private beach right there. It's not my house. I don't own it, fortunately. I'm just here for a week. But it's a beautiful spot, right? But you can do a lot with $26 million. And so, $100,000 per Bitcoin sounds pretty cheap. 10 million is 100x from here. 26 billion is a 260x from here, right? And it may not take as long as you think. A 100x ago, Bitcoin was $1,000. A 100x from now, Bitcoin would be $10 million. Granted, because of power laws and because it's a larger market cap, it'll take a longer period of time, but $1,000 Bitcoin was not that long ago. Not even a decade ago. Barely a decade ago. So, actually, I think the number's a lot higher because this 26 million number is only accounting for the debasement and depreciation of the US dollar. It's not also factoring in the increase of global wealth we've seen since 2009. If we were going to do that, we would get to a larger number, about $43 million per Bitcoin. So Hal Finney's original division of the world's monetary wealth into the number of Bitcoins was dwarfed by 2.6x due to the increase of political currency units. And that number is also dwarfed almost by 2 by the wealth creation of the world. But there's a problem here. As we create more wealth in the world, you have to have more political currency printed because the system needs inflation. The system needs prices to go up. The system needs oceanfront property to increase in value. The system needs the price of technology, the price of goods to go up in purchasing power. Why? Because the cost of these assets is what backs bonds. It's what backs debt. It's what backs the global monetary system. If you have real estate prices fall in US dollar terms, the tax receipts from that real estate begin to fall. And if the tax receipts from that begin to fall, then the debt burden explodes, right? You have the debt is fixed in dollar terms. So if you have assets falling in dollar terms, the debt balloons in relation to those assets. If you have $1 million of debt, $1 million of assets, and you're 1-to-1, right? And if the assets fall 50%, now you're 2-to-1. So if assets fall more, even higher, right? So the US government is on your side when it comes to pricing assets up and up and up in terms of nominal purchasing power. And they're against you when it comes to food, when it comes to energy, when it comes to electricity, when it comes to your car, when it comes to your education, when it comes to your Medicare. They need the cost of those things to go up. They need the cost of everything to go up. And so this is the problem. Even this number is misleading. Even this number is too pessimistic because the government's just going to print more currency over that time. So what would $50 worth of Bitcoin do? Not in the past, like those charts were showing, but in the future? What it would do in the future, $50 of Bitcoin right now at $105,000 per Bitcoin is about 47,617 sats. Why is that an important number? Well, there are 2.1 quadrillion sats in the world. There are 8 billion people, going to be 9 billion in the next decade or so, right? If you divide it out and you apply Pareto's principle, most people on the planet will probably never have significantly more than 50,000 satoshis. Some people will have 1 million satoshis, 1% of a Bitcoin. Other people will have a whole Bitcoin of 100 million satoshis, and that would be crazy. Oh my goodness, you have 100 million satoshis? Most people are only going to have 50,000 satoshis. If you were to do the math on 100 million satoshis, with 50,000 being the median for the average person on the planet, you have 2,000 times more of the purchasing power than the median person is going to have if you have 1 Bitcoin. If you got 10 Bitcoin, you're a Satoshi billionaire. You don't have 2,000 times more purchasing power than the median person in the world. You have 20,000 times more purchasing power than the median person in the world. And the median person in the world in the future is probably going to have more power and influence and wealth than the median person today in 2025. In the same way that the median person in 2025 has way more power and purchasing power than the median person in 1984 or 1985, right? Over the course of the last 40 years, people have a lot more power, even those that aren't the richest people in the world, right? I have the same iPhone as Elon Musk and Jeff Bezos, right? And you probably do too, right? You have more in common with the future and the past, and you have more in common with the world's wealthiest than the average person in the world. To me, it doesn't matter if you have 2,000 times the average purchasing power or 20,000 times the average purchasing power. It doesn't matter if you have 1 Bitcoin or 10 Bitcoin, you're still super early. Frankly, even if you have only 200 times the median purchasing power, which is 0.1 Bitcoin, like you're still doing great. So you should be much less obsessed about what is your Bitcoin stack and much more obsessed about holding on to that stack. Okay, great. If you have 0.1 Bitcoin, you'll be able to retire for 200 years, right? If you have 1 Bitcoin, you'll be able to retire for 2,000 years. If you have 10 Bitcoin, you'll be able to retire for 20,000 years, right? Like it doesn't matter at the end of the day. All those periods of time are exceedingly long, and you're probably not going to live to see all of them. If you have 0.1 Bitcoin, you're not going to be able to spend it all. If you have 1 Bitcoin, you're not going to be able to spend it all. If you have 10 Bitcoin, you're not going to be able to spend it all. If you have 100 Bitcoin, you're not going to be able to spend it all, right? So why are you worried about increasing your Bitcoin stack? Your focus should be holding on to it. And what is that in terms of dollars? What is that 47,000 satoshis in terms of dollars? $20,476 USD if Bitcoin goes to $43 million. And I really believe it does. Why? Because every other monetary system in the world is based on human emotion, human flaws, human corruption. And you have Bitcoin, which is really tiny right now comparatively, but that doesn't require human oversight. It doesn't require the human heart in order to maintain and manage its monetary supply. If you have a system built on humans and fraud and corruption, and you have a system built on math and code and transparency, it is inevitable that that system absorbs the wealth of the old system, of the dying system, right? If you have a technological system that is reliant on the strength and the back of the horse, and a technological system that doesn't rely on that, it will absorb the value of that purchasing power. If you have a system that relies on the death and destruction of whales, which will inevitably lead to the extinction of the whales, compared to the light bulb, which is based on electricity and math and global consistency, it will absorb the purchasing power of all those things. So if Bitcoin remains decentralized and secure, that's the asterisk, then it's going to at least $43 million of Bitcoin and a mere $50 worth of Bitcoin, which, by the way, you should be stacking every week, not once, but every week. That's going to be 47,000 stacks for $20,000. You could be making $20,000 a week right now as a time traveler while buying $50 worth of Bitcoin and just waiting 30 years. And again, this number is going to be really pessimistic because if we increase the number of purchasing, a number of political currency units by 10, that's $430 million per Bitcoin. If at the same time we double global productivity, that's $860 million per Bitcoin. What happens if we triple it, right? What happens if we triple it? Instead of $860 million of Bitcoin, we could be looking at over $1 billion for Bitcoin, right? If we just increase the number of political currency units by a factor of 10 and we triple global wealth, we're looking at $1 billion Bitcoin. As Vijay Bonaparte says, there are two kinds of people. There are those that have a US price target that they're hoping for when it comes to Bitcoin, those that are still pricing the world in terms of dollars. And there are those like myself and hopefully you that are beginning to price the world in terms of Bitcoin as their unit of account. And if you're viewing the world in that sense, those that have a sizable Bitcoin stack or any Bitcoin stack, which is a sizable Bitcoin stack, are trying to increase that stack. And that is my encouragement. Stop thinking in terms of US dollar number go up. You know, it is a useful oversimplification for people, but as long as Bitcoin remains decentralized and secure, it remains inevitable. It's going to absorb all the political currency units and the technological purchasing power of the world. And we'll see tens of millions, if not hundreds of millions of dollars per Bitcoin, and eventually billions of dollars of Bitcoin. That's my encouragement. You're not too late to Bitcoin. It may feel like you're too late to Bitcoin. Just start with $50 once a month, then go to once a week. Eventually, if you can, go to a couple times a week. Go to once a day. Every $50 you're buying, it's 48,000 satoshis. That is probably going to be a lifetime's worth of savings for the average person in the future. You might have to wait 20 or 30 years, but that is coming. And even if you don't feel like you're going to be around or alive in 20 or 30 years, that's okay, because your grandkids will be. It may this whole Bitcoin experience may not be for you, it may be for your kids. And so this is my encouragement. Forget all the big absurd price targets, right? If one Bitcoin becomes worth $2.5 million, that means 4 Bitcoin is going to be worth $10 million at some point. You have the opportunity right now to make $25 million in the next 90 seconds by texting me or booking a call. So if you reach out to me in the link in the description below or text me, the phone number is on the screen. You know, that takes 90 seconds to reach out. Let's have a conversation. My average client at the Bitcoin Advisor increases their Bitcoin stack by 51.2% on average within the first year. An average. And that is including Bitcoin maxis, as including whole coiners, right? How do we do this? Because we help people find new ways to acquire more Bitcoin. We help people increase the confidence of their spouses, family members, businesses, whatever, right? I'm helping multiple clients right now transition their businesses into Bitcoin stacking companies, right? You know, mini Michael Saylors, right? It's my job to help you figure out new ways to buy more Bitcoin. And I've seen a thing or two. And so you can believe that, you know, maybe you're not the average, right? Whether it's increasing your stack 10% or it's increasing your stack 100%, my goal to help you maximize opportunity cost, because the main message of this video is that the biggest expense you are ever going to face is the opportunity cost of the next couple of years and you squandering the opportunity. Of course, there are other risks as well, right? There is every single year, maybe a 1.5% chance that you're going to die, right? Which is a 40% estate tax on your assets if you die. And let's assume that there's a 20% chance your family screws up the Bitcoin inheritance, right? You give them like a cute little treasure map. 4 times out of 5, they figure it out, but 1 times out of 5, they screw it up and they lose it all or have it stolen, right? Let's say there's a 5% chance you make a user error. Let's say there's a 3% chance you don't optimize your taxes appropriately. Let's say 99 times out of 100, you're not going to get sued, but 1 time out of 100, you are going to get sued. And let's say that, there's a 1 in 200 chance that you're going to have a $5 rich check against you, right? My point is, if you're going to actually quantify the risks to your Bitcoin, and if you have 4 Bitcoin, and if you believe that 1 Bitcoin is going to at least $2.5 million per Bitcoin, you have absolutely no excuse to not take the minimal amount of action to reach out and book a call, because let's have a conversation. My team at the Bitcoin Advisor has 40 people with over 3 centuries of cumulative Bitcoin experience, with a 100% success rate, with a 0 single point of failure. over $1 billion in Bitcoin overseen. I do not care if you have 0.1 or 0.5 or 3.2 or 16 or 37 or 93 or 100 or 200 or 300 Bitcoin. It does not matter. All of those amounts of Bitcoin are going to be intergenerational levels of wealth. If you have half a Bitcoin, it may not feel like it, but pretty soon you're going to have the same purchasing power as somebody right now that has 5 Bitcoin. So if you have 0.2 Bitcoin, book a call. If you have 5 Bitcoin, book a call. If you have 80 Bitcoin, book a call. If you have a couple hundred Bitcoin, book a call. I'm encouraging all of you to do it. The more Bitcoin you have, the more urgent these points are. The less Bitcoin you have, it's still very urgent because all the people with more Bitcoin than you are about to price you out as the market gets euphoric. So please take action now. Reach out. This service is not for everyone. Only those that are serious about keeping their coins and actually believe Bitcoin is going to tens of millions of dollars a coin. Okay, most of you, this service is not for you because you haven't felt enough pain yet. You're not taking it seriously yet. You're still procrastinating this. The service is only for those that want to be serious about increasing their Bitcoin stack because that is our job. That is my job. How do we help you get more Bitcoin? And that's my message to all of you. Most of you are probably buying way more than $50 a week. So you got to take this seriously because most people aren't going to have even a % of the Bitcoin stack that you have. You are definitely not too late to Bitcoin.